Discouragement is something that we all experience along the journey of becoming our greatest self. This is just how life works. You have stepped outside of your comfort zone in pursuit of something new, and therefore disappointment along the way is unavoidable. True character is the ability to give yourself hope, knowing in the end you will prevail. Welcome to the first ever weekly recap where I'll be breaking down my wins, my losses, my break-evens, all my trade from the past week, just to give y'all an overview from what a normal trading week looks like. So right now, I am busy with a 50K challenge that I started last week with the prop firm's My Funded FX. As you can see right there, these are the only 3 trades that I took last week because my prop firm, they shut me down because of a migration, so I wasn't able to trade from Wednesday till the end of the week. These are the only 3 trades that I took. You can see USD CAD. That was the smart money concept. It should have been a break even, but I didn't put my stop loss on time at my entry point. So I got a minor loss from $18.70. The other one was Euro Australian dollar with a profit of $706.88. I already broke this one down in my previous video, so if you're interested, you can go watch the breakdown. And on that trade, it hit TP, 1 to 3 risk to reward. And the other one is Canadian dollar, Japanese yen with a loss of $124.90. That is the one that I will be breaking down in this recap video. The other one you can watch in my previous video. So let's go to the charts. So we are going to start off on the daily as usual, and I will explain why it was a loss and not a win. Like you can see right here on the 4-hour, this was my entry right here, and it was a TP. But I will explain why I came away with a loss instead of my trade hitting TP. So we go to the daily time frame, and on the daily time frame, we start off with looking for an impulse followed by a correction. The impulse should of course break the previous structure. In this case, it is a bearish structure, so we will be looking for impulse to break the lowest point of the previous structure, including the wicks, followed by a correction of minimum 2 daily candles. Right here, you see the break of this previous structure with this impulse to the downside. The impulse consists of all the same candle color. So it is a bearish impulse, so all the candles are red. Breaking this previous structure point, this wick right here, and close with the body below it. The correction is small and slower than the impulse itself. It has 2 daily correction candles of the same color. So this is a good setup for us to possibly use this as a trade. So right now we go to the weekly time frame. On the weekly time frame, we will be looking for a support or resistance that could be of influence in our trade. So let's put this one right back. So this was the view that I had of the weekly time frame before I entered the trade. Right now you can see this level right here was a previous resistance level that got broken that actually turned into support. Let me draw the box so you can see it right here. This level was previously resistance. Price came, found resistance, pushed back to the downside. Price came back again, found resistance, pushed back to the downside. Now price came and broke it. So normally you would say this level is going to be support, and price will find support and create a new impulse to the upside. But as you can see, price had this green candle that almost failed to close above the previous bullish candle. Then price gave us a doji, also not closing above the previous green candle. Then price gave us a bearish engulfing candle, forming a bearish candlestick pattern at the top of the market. So this indicates that the possible reversal of trend may start on the weekly time frame. And if you go down back to the daily time frame, as you can see, price already went bearish. It already went bearish with this impulse breaking previous structure, going from bullish, creating higher highs and higher lows, now breaking, going bearish, creating lower lows and possibly lower highs. So the weekly has a candlestick reversal pattern at the top of the market, and the daily already went bearish. So this was a confluence for me that this setup on the daily time frame will possibly play out in my favor. So now we come back to the daily time frame, and on the daily time frame we will draw our Fibonacci in the opposite direction of the correction. This we do to measure the distance of the new impulse that will form. Then we go to the 4-hour time frame. On the 4-hour time frame, we will be looking for a break of this 61 level on the Fibonacci, followed by a retest. That will be our entry, and then our stop loss will be at the 88 or above the 88. Depends on how this structure is going to play out, and our TP is going to be at the negative 27. So right now we're just chilling, waiting for price to break the 61 level. As you can see right here, price initially came below the 61 level, but it did not close. So normally we would still not enter the trade as of yet. But I did enter the trade already, just right here. I normally would not recommend that because it is a very risky behavior when prematurely entering trades, but I did enter the trade already right here. So let's put our entry right here at the close of that candle, and my stop loss was just above this structure level right here, and my TP was at the negative 27. So right now you can see I'm already in the trade. Normally we would wait for the break, then followed by the retest to enter the trade and ride it all the way to the negative 27. Right now I prematurely entered the trade, something I would not recommend, and my stop loss is just above this structural level right here. You could put it on the 88. You can also put it above here, but that means you would also have to adjust your entry and make sure it is always a minimum of 1 to 3 risk to reward. So right now you see that price initially came back and retraced against me, and then it went in the right direction. But as I was looking at the trade, I saw this retracement going against me, and I got out of the trade. If I just would have accepted the risk when I entered right here, I wouldn't have lost this trade. But because I entered prematurely, I saw the retracement going against me, and I was scared, so I got out of the trade. And that was the loss that y'all saw on the CAD JPY trade that I previously shown in the beginning of the video. But let's play this out and see how it would have played out. Right here, price has broke the 61 level, so you could place your entry on the 61 to get tapped in and then ride the trade all the way to the downside. If you would have done that, let's put this one on the 61. You can see right here, price came back all the way, almost tapping you in, but it didn't tap you in, so eventually you would not have entered this trade. And then from there, it went all the way down to TP. Didn't hit TP. So as of right now, we're still in the trade. One thing I would recommend is not to babysit your trades, because if you see this all the way almost hitting TP, then followed by a retracement that almost took you out at break even if you enter the trade right here, trust me, 100% of almost 100% of the time, everyone would have closed the trade right there with just a small profit. But as you can see, after this retracement back to the entry point, it just melted and hit TP. Came all the way back, melted and hit TP. That's why you shouldn't be babysitting your trade. You should just set your limits and go enjoy your day. And as soon as these limits are hit, you come back and analyze the trade. But if you, as you see right here, if I had held my trade from the entry that I had from right here and accepted the risk, I still would have hit TP for a 1 to 3. But because I was babysitting and I was scared when I saw this retracement, because I entered prematurely, I just ended up closing it right there, and this was the loss. So this was the first ever weekly recap. The other trades I already broke down. In the future, be on the lookout for more. I appreciate y'all watching. Thank y'all. Peace.